Hi everyone, let's have a look at my bullish and bearish Elliott Wave scenarios on Bitcoin, including potential trading setup, starting on the low time frame where we have been looking for a three-wave structure to eventually see a bit more upside in either a wave C, which is an impulsive structure, or a wave Y, which is a three-wave structure. So both are still possible. On this low time frame, we had this move to the downside, which was an impulse. And that was actually very nice because we had a lot of confusion in this range over here. And once you get an impulse, you have to know, okay, is it a wave C, a wave A, or a wave 1? And in one of the previous videos, we have figured out, well, the highest probability is that this is a wave C, which is then the end of something, probably an expanding flat then, for continuation to the upside. And I will link the video in the comment section. Now, we also had bullish divergences, CVD divergences between the low over here and the low over here, giving us the target at 30k. So that is definitely an interesting target to look out for. And in this particular scenario, we do expect more upside, which is also my preferred scenario, because I would really like it to see these highs taken. We also have a bit of a double top over here, and we also have my target box over here, which is still untouched, between 30.2k and 30.4k. So that is quite interesting. And as you can see, we also have two 1-to-1s, which is the trend-based fib extension taken from the low over here to the high. And then one 1-to-1 is taken again then to the low of W, and the other one is taken to the low of Y. And it creates a little bit of an area of interest for potentially the end of then a wave C or a wave Y. But in this particular scenario, more upside is expected, which is, as it stands now, also my preferred. If we then go to the micro and I go to the 15-minute, we have been basically looking yesterday at this structure over here where we said, hey, this looks to be a 5-wave move to the inside. Now in the bearish scenario, this is then a wave A followed by a wave B, and then we expect a 5-wave move to the upside in a wave C, which then is a 5-wave structure over here where the most common target area for a wave C is between the 1 and the 1.236, which also is close to the range point of control of this volume profile range over here, as well as the value area high. So the point of control at 29.3k and the value area high at 29.8k. So this target area for wave C is basically in the middle. So that could be quite interesting. Now the invalidation for basically this being a corrective structure and expecting more downside is going to be taking the high over here. So we just now said that it's most likely this is the end of something, this impulse like a wave C. However, you always have to keep the bearish scenarios in mind, where if this is somehow a wave A or a wave 1, you expect this corrective 3-wave structure not to go above the origin of the impulse. So that is a clear invalidation at about 30k for the more bearish scenario. However, of course, this bearish scenario, let's say this 3-wave structure, can still be part of the bullish scenario, as I've just mentioned on the low time frame, right? Because if this is a wave C to the upside here, we expect an impulsive move. But if it is a wave Y, we expect a 3-wave move. So we expect an ABC followed by another corrective structure and then another 3-wave move to the upside. So keep that in mind, that if price is gonna potentially move to the downside after hitting this target area for a wave C, it doesn't necessarily mean the bearish scenario is going to be activated for more downside. It can also mean we're just going to correct again and then find more upside once more. So this move to the downside, if this move to the downside would be in 3 waves, it's more bullish. If it is going to be impulsive with a high amount of volume, it's of course more bearish. If we then look at the bullish scenario over here, we had this being the end of an impulse over a wave C, basically, right? Looking for then a move to the upside in a wave 1, 2, and now being part of a wave 3. Like this move to the upside is part of a wave 3, where a minimum target usually is the 1.618 at about 30.1k, and then eventually you get a range in a 4 and then eventually a 5. So more upside is expected. We had the potential trading setup as well, where we had the target box over here, which included the range point of control, the range value area high. We had the golden pocket as well, so some nice confluence, and we had a daily actually as well. So some nice confluence in this area, giving us the potential trading setup, potential long setup. Also we had the bullish divergences, right, for some extra confluence. Now the entry was then on the golden pocket, stop loss was below this low, trading it to the upside. By now, looking also from an Elliott Wave point of view, stop loss should be break even. This move over here had the highest volume of this structure so far, and you at least expect price to take this high if this is an impulsive structure in a 1, 2, 3, 4 and then a wave 5, where this wave 5 should then have less volume than this wave 3. So as a bare minimum, the stop loss can basically go below these lows over here, actually, from an Elliott Wave point of view, as it stands now, 28.3k, or below these wicks over here. No financial advice, this is purely based on Elliott Waves. But in this scenario, we simply expect more upside, where a wave 3 can be very, very extended. Like you can see also with the targets that I have on my chart, the 1.618 is basically the minimum target, but it can be extended a lot higher. And that brings us to a potential scenario over here, which is a scenario where we are going to take the high at 31k. So this wave 3 is going to be very, very extended, moving to the upside. And if I then remove the micro scenario and we move into this medium time frame scenario, switching to the 1 hour, if this impulse is going to be extended to the upside, then one of the scenarios I am looking for is potentially an expanding flat, which is then a 3, and then a 5 wave move to the downside impulsively. Now, if this is an A, B, and then a wave C, the most common target for this blue wave C is between the 1 and the 1.236 over here, which, as you can see, is lower than the expanding flat target for a wave B, which is between the 1.236 and the 1.38, which is 32k to 32.7k. So this is the area of interest for an expanding flat. However, a rare target for a wave C in a zigzag is the 1.618, and the 1.618 is sitting right on top of the 1.38 at about 32.7k. So that can be quite interesting for then maybe a liquidity grab and a continuation to the downside, taking the 2022 range highs, giving the potential trading setup for then a continuation down. Of course, it depends if price is moving to the upside with high volume, bum, 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 you know, pushing through everything. This trading scenario, of course, is invalidated and not one to be taken. And if we then go to the more bearish scenario, we don't expect price to go all the way up. We basically have a resistance area over here with the two 1-to-1s as mentioned before, and we have the target box between 30.2k and 30.4k, and that is then basically the area of interest for a potential short scenario. Then again, if price is going to push up on high volume, this scenario over here is not validated, right? Like, you want to have your own strategy, you want to have your entry requirements, exit requirements, your own plan. You want to wait and see for whatever you want to see and then enter, right? If this is going to push to the upside like crazy on high volume and you just enter just because your stop loss is here, well, your stop loss can be triggered in like 1 second, right? You need a clear plan. You need to know what you're looking for before entering certain trades. And of course, these scenarios are educational. And I try to say as well, like, hey, if we are going to push to the upside very quick, then this is of course not a very good idea. Now, we had the CVD divergences, as already mentioned, between the low over here and the low over here, where the main target for the CVD divergences is taking this high over here at about 30k. Once this high is taken, we usually say the CVD divergences have played out, and therefore you go back to neutral basically. And I do think it's interesting to show the divergences. So we had the low over here creating a higher low on price, but a clear lower low on the yellow as well as the blue CVD line for bullish divergences. And funny enough, we also have this massive wick, which came absolutely out of nowhere. That's actually very rare. And the wick went all the way to 30.6k, which if we go to the chart is right around here, which actually would be some nice additional random confluence to fill this wick to the upside with price moving up. Could actually be very nice. And if we then go to the 5 minute, we do have some bullish divergences, price moving to the upside, CVD moving to the downside, the yellow line. So that is interesting. But also between this red candle and this little range over here, creating higher lows, but on the CVD creating lower lows. So bullish divergences all over the shop, expecting a bit more upside, and then we have to wait and see how far price goes. For now, I hope this video was helpful or valuable to you. Please check out the macro and the high time frame video if you're interested. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.